Hello, everybody. Welcome to your weekend edition. Happy Friday, everybody. Cheers. We have a new entrant in my whiskey bar this week, thanks to my friend Ryan, who hosts trivia on Tuesday nights. I came in second place at trivia on Tuesday night. Unfortunately, we got in a tiebreaker, and I guessed the wrong Rotten Tomato score for the movie Hocus Pocus. But second place prize was a fine bottle of Cutwater American Rye whiskey. I must say, it's pretty good. Got a little bit of a bite, but a little bit of a bite like the trading markets did this week. If you were long and holding long positions, you might have got a little bit of punch in the teeth. And are we done yet? Well, let's discover that as we go. So I'm going to take a sip of this and we'll get rocking. All right, everybody. Hope you all had a great trading week out there. Hello, Ron, Terry, Siraj, Vernon, Christie. Yes, especially for people who were short. And I am still holding my short positions. I did add to one of my positions today as well. And I did close out one of my positions. I'll tell you all about those as we progress today. Since I have been telling you about some of my positions, I'll disclose what's going on with those ones. And Les and Alan as well, good to have you guys with us. And Randall in San Diego, yes, it's a beautiful day here in Southern California. I'm looking forward to going out and having a fantastic weekend. So here's what we got cooking for today. I'm going to talk about, obviously, you see the Federal Reserve here, got a nice stormy position going on. I had another one that was blood red, kind of an evil looking sky, but I figured this is ominous enough because, in my opinion, everybody, the storm is a-brewing. It is percolating as we speak, and who knows if we're out of the woods. So I wanted to start off with kind of an overall market review for the week, and then we'll go and look at specific markets, specific questions. I got questions on Amazon. I got questions on Constellation Brands. So let's check it. Big Ab, you're in Phoenix at 115. Oh, I got one word for you. 4 letters. Move. Come on, 115. Good Lord. Your AC bill is probably like my mortgage payment every month. Let's start off at the bottom, work our way to the top, and we'll do a bunch of charts here. And again, keep it interactive. For those of you who might be new, hit that subscribe button. And if you want to send questions directly to me to get answered, put question marks before your question, and most of you already know the deal. All right, let me go to our platform out here. Here is the NASDAQ 100, but I'm going to start at the bottom for the week. Not what it did today. What I'm going to do is try to make this part of a Friday tradition where I will do a weekly review of markets, and then we'll do it from two perspectives. I'll start with the week, but I'm also going to show a little bit about what it did today, because for some of these, it was a very ugly day. All right, let's go to the weekly time frame, .w, and I will start at the bottom and work our way up. It's a little bit confusing depending on which market you look at, but near the bottom of the barrel here was Bitcoin. Now, you see that the challenge with Bitcoin is you see it had this big gap up when the futures markets rolled over. So what I normally do when I calculate out the results for the week is I go from last week's closing price to where we closed at this week. So it actually, or sorry, that's not the closing price. There you go. It actually shows down 5.96 for Bitcoin. So that's right near the bottom of the barrel, right? That would be our, I guess, our seventh weakest performer. 6th weakest performer. The worst, G to the L to the D. Here is gold today. The weekly chart of this is interesting because this is supposed to be the carry trade. This is supposed to be that let's fight inflation by buying a commodity such as gold, which historically has been a benefactor and been rewarded by the inflationary pressures that a market shows. And I think a lot of the show will revolve around inflation, especially when we start to look at the US dollar. For the week, you're looking at gold down 6.15%. This is GLD weekly. I'll put the numbers on here so you can see. From the close of last week to where we are right now, 6.15% slide. So not the worst performance, but a hell of a bad week, especially when this is a week where you would think that people would be looking at gold thinking, I've got to buy it. I feel like this is a retail head fake. Like, you know, we mentioned Paul Tudor Jones talking about the inflation trade. Well, you got to be positioning yourself that way. I feel like it's bringing in a whole lot of retail people, and then they rip it down just to stick it to them, and then get them to stop out and then buy back in. I did buy, I think I'm in 5 call options on GLD. Believe I went to September on those. So I'm fine. I'm not worried. I think over the next month or two, gold will have its day in the sun. But again, it's about market timing. A lot of people who bought earlier this week, just a couple days ago, you took a pretty big hit. And I'll show you the weekly here on GLD. let's go to the .D. That's the weekly. Here's the daily. We actually started to show a little bit of an up move today and then gave it up. And we talked about it on Wednesday's show looking at the 163 mark. So let me zoom out just a little bit here so we can look at the gold. I think it was 163. There was a level right here, right around 163 where we'd be closing that gap. That was one of the areas. We talked about 167 and 163. I took a stab at it at 167, which is where I bought my call options. If we get below that 162 mark, I may unload those, but I really think at this as an intermediate term play, meaning hanging on to it for 3, 4, 5, 6 weeks. You'll probably do okay. Although right now you see the volume surge. There's definitely an interest in people unloading GLD and getting out of gold, which is somewhat surprising, again, given the inflationary environment that it appears we are teetering on right now. That was your 6th place finisher. So Bitcoin number 7. We'll talk more about crypto as you guys want along the way. We had gold at number 6. Russell 2000. This was, as far as index goes, this was one of the bloodiest ones out there for the week and for the day. Down 2.6% on the day for the Russell. I'm going to extend our yellow box, which, again, this yellow box is simply saying, oops, damn it. This is why you don't use snap mode, because it always wants to lock it in there. This yellow box is basically a range that's been established for the better part of a few months here. Let me zoom out so you guys can all see that. We haven't really managed to break out of that range, and you heard us say on Monday, hey, you're coming right back into that top. If you think about it, this could be a potential short, but I'm not that excited about going long on the Russell simply because we're still in that range. And notice we sold off aggressively this week. On the week, you're down about 4.25% for the Russell. I'll look at the weekly so you guys can all see that picture as well. Load the truck up on gold at 158. Yeah, I'll probably buy a bunch more. I'm not in very heavy on it, Big Eb. I mean, 5 contracts isn't that bad, but if we get much lower, I will probably buy a bit more. So here's your gold chart. The Russell 2000 chart. Obviously, this monstrous run that we've seen in the last, call it 30 weeks, well, a little bit more than that, up almost 70%. Now we're just consolidating, going sideways. So until it breaks out of that range, I wouldn't expect anything really exciting. I would be shorting the top of this and looking to buy the bottoms. Bottom of that range, in case you're wondering, is right around 2,080. Top of that range, in case you're wondering, is right around 2,350. All right, so that was number 5 on the list. S&P 500. I am still holding my SPY shorts. S&P was down 2.2% this week. It looks a lot better in this picture here, right? It doesn't look that bad. Obviously, for those who were long the market this week, you probably felt some pain. You're thinking, oh my God, this is the beginning of the end. It really wasn't that big of a deal, guys. A market week where you're down 2.2% really isn't that bad given how much these things have been moving. It was down 1.67% alone today. Here's your daily of it. Certainly a very ugly candle, but as you've seen, when we have these really big moves down, it can have a very quick knee-jerk reaction right back up to the upside like it did back in mid-May. You can see that 3-day slide where it fell aggressively and then all of a sudden bounced right back up in 2 days. So who knows what we'll see. The good news for the markets is it is Friday. Gives us a little time to let the dust settle, maybe the panic, fear selling subside a bit, and find ourselves in a situation where cooler heads will prevail on Monday. Who knows? Or, you know what, we could see momentum pick up even further as international markets start to digest more inflationary information. And remember, next week, you've got Lagarde, head of the IMF, making statements, which should be... She seemed to have been very positive in supporting for cryptocurrencies, but I'm more interested now in what her stance on inflation is for the Eurozone and global communities and markets like that. So inflation for me is the number one talk track for the markets going forward. S&P was your number 4, or whatever. I'm losing track of numbers. I'm going to keep going up the list, though. Those were all the negative ones. Surprisingly, we actually had some positive markets. Now, even though the NASDAQ shows being down 0.98% today, for the week it was up. It was up ever so slightly at 0.35%. So not everything was ugly out there for the week. On the day, though, a pretty ugly red candle here. You can see closing at 14,017 on your daily candle for the NASDAQ. Now, technically, I don't see anything that's that interesting here. I actually thought we would see a bull trap, which is where we break our all-time highs and then come ripping back down. And you notice that we did this week. We broke up above it on Monday, and then all of a sudden we had 2 days where we ripped down, third day opened lower, and then all of a sudden we had that big green candle yesterday. So a lot of choppiness going on at this all-time high level. Very hard to trade that type of stuff, which is why I'm kind of shifting my stance a little bit more towards an intraday trader and trying to be out by, for when I'm trading equities, for example, being out by the end of the day. That was your number 2. Number 1, as far as performance goes, even though it had some pretty ugly swings, Wednesday and Thursday were very, very ugly for crude oil. It had a stabilization type of day today, ending the week up at 0.58%. So it's really one of the only ones that we look at here, looking at over 0.5% gain, and I love the fact that it came ripping at that 72 mark. We had that identified as an overhead supply zone. It fell from that almost $3 from that zone, giving great opportunity for anybody who was short on that one, and now you're seeing a nice little bounce back up. So great action in our top 7 major markets out there. The one that to me is a little bit concerning above all of these is probably crypto. It seems that just cannot seem to get a footing. Ugly day today. As you can see, we've actually had 4 pretty big down days. We were over $40,000 on Bitcoin on Tuesday, and now all of a sudden we are potentially going to break 35,000 here at any moment, the way this thing has been trending down. So kind of an ugly day there. All right, what do I see? Colonel Vodka? No, this is a Cutwater whiskey is what I'm drinking today. I showed up here. I was giving props, but it's a pretty good one. I don't know where this one is made. Cutwater. Oh, out of San Diego. Well, there you know. I guess I'm supporting California with my Cutwater whiskey out there today. So cheers, everybody. If you're not drinking, I hope you're having a nice, cool glass of water and chill out. All right. I'm going to go into some listener questions. And hello, Tony. Good to have you with us here today. And Pepe as well. Daniel, I'm a whiskey. Fridays is my whiskey day. Yesterday was a beer day. I was actually wishing a friend of mine a happy anniversary. You guys might remember we had Mike Sirik on the program, and he's got a trading room that he runs, and it was his anniversary, so I had to go in there and roast him a little bit yesterday. It was kind of fun. He's a good guy. So let me go to our visuals here. I'm still doing this, and I hope that you guys are as well. I haven't been enforcing it, not enforcing, but talking about it enough. I'm still doing 30 minutes a day of German and 100 push-ups a day. It's been a pretty rough go. It's a time-consuming, but it's worth it. So Catherine, Jerry, Thomasina, Alan. I know Alan's keeping up with his, having a beer a day. I hope that you can live up to that one, Alan. I know you can do it. You got this, brother. Sue doing her walking. Leslie as well as meditation and push-ups. We got Tom doing burpees. Tom, are you still doing 50 burpees a day? Come on, man. That's tough. I tried to do 100 a day. I made it 8 days, and I just couldn't do it anymore. Kevin playing some guitar. Les is also walking and reading. And Simon doing 1,000 words of his book. So good. And Thomasina as well, trying to rehab that ankle and work on the book. So good. I'm glad everybody's still doing that. Hopefully you are sticking to it. I thought I'd start with this one, which is a good comment from Kevin. And it's just the nature of the financial markets. And it is this. He says, it's crazy to think about the fact that markets are now upside down, where problems in the economy give a reason for market strength and economic stability makes it drop. I don't know if that's a new phenomenon. I just think it's gaining a more of a foothold in what the new norm is, right? So when I started off, it was still that way, but there was some secrecy to the Fed back in the late 90s. They didn't telegraph every single thing that they do. And if you listen to the Jerome Powell press conference on Wednesday, God, it was so interesting. It almost made it feel like he was at the service of the markets and us as consumers, because he was like, listen, if there is any change whatsoever, and we even begin to think about making rate changes or any sort of policy changes, we will be sure to notify you as soon as possible so that everybody has that information. That's a stark contrast to what you heard from Alan Greenspan and Greenspeak back in the late 90s. He would talk in circles and come around and having everybody in that room going, I have no idea what he said, but it sounded pretty good. Thank you, Mr. Greenspan. Have a great day. Greenspeak, look it up, is literally, it's a term for saying a whole bunch of crap, but really not saying anything definitive or giving anybody any clues. So the Fed back then, when I started, was almost deceptive in how they responded to questions and where they were going to go or how they were going to support the economy. Right now, it has become much more transparent, as Bill Addis talks about, but it's also become much more accommodative. And he said that word, I don't know, a dozen times in his presentation on Wednesday. But really, you're right, Kevin. It's this moment where if we get bad news, like let's say those unemployment numbers that we saw, they spiked up this week, or we saw crude oil inventories that were just way lower than expected. When you have these huge outliers of data that are counter what the belief system is, normally it results in a dramatic move in the market. So when we have initial claims this week, which are supposed to come out, I can't remember off the top of my head, I think it was supposed to go from 372 to 360, we came out at over 415,000. That right there would normally, under any normal market condition, would have caused a sharp sell-off in the equity markets. Why? Because all of a sudden we have this unpredicted spike in people out of work. The reality is people don't view it that way anymore. They look at it as, oh, wow, yeah, it's a spike in unemployment claims. That means the Fed is going to do more spending, more stimulus. We're going to have Biden and the administration, or Trump and the administration, whichever administration it is, not Democrat or Republican. It's just saying we're going to pump more money in and bail out the market. So those who are long-term bullish and believe markets never go down, like one of our viewers here, Unscammable, he's like, markets will always go up. I'll buy every single dip that ever happens. If your time horizon is 100 years, you are going to be 100% correct over time. Hopefully, right as you stop in your 99th year, it doesn't drop 50% because then you're screwed. But that mentality of the government or some facility is going to backstop any sell-off in the markets is very true nowadays. You know, it's unfortunate because you don't get the natural pullbacks in the market, which I believe should happen. I really think that we should see a bigger correction in the market given the valuations we have right now. I think things are way ahead of themselves, but it is what the market is, and Kevin's right. It's kind of weird to think that this is kind of that new norm. All right, more questions. Let's go to this one. Thoughts on Amazon shooting star today? Lee, I actually own Amazon, or I'm short Amazon through options. So I have puts on Amazon, and I plan on buying some more as we get closer to the July launch of Blue Origin or Blue Horizon or whatever it's called, the right spaceship with Mr. Bezos in it. You can see here we do have a shooting star, and there's a couple things I want you to notice on it. I did add to my position as we broke 3,500 today on Amazon. I bought one more put position, same position, same strike, but I added one more to it, and we'll see how this one pans out. I do like the fact you have really high volume on the shooting star, but it's not really the best. I mean, what makes this attractive to me is you have this. Oh, I'm sorry, you guys can't even see it. Let me put the chart up. Sorry. What makes this attractive to me is you can see this really aggressive run that started on. Let me get the date for you. Stop with my tracking. On the 7th of June. Right, you have this really sharp, aggressive move. A great move up from the 7th of June with one small red day. And I don't even think I'd call that a red day. That's just a move sideways kind of day. But it kept on moving up. And then you have this shooting star. And volume has been increasing this whole time. And you had much higher than normal volume on today's action. That by itself is attractive to finish with a shooting star like this with higher volume. I prefer to see this candle, the body of today, a bit lower and preferably red. But it will do. What makes this one work for me, Lee, is the fact that you're coming back into these highs that go into late April, which would be all-time high. So you're coming into a pretty strong overhead supply zone where it had an aggressive sell-off. So I like it from that perspective. Now, how would you go about trading this? For me, it's fairly simple. Right here at 34.73. If we open up above those, right, 3-month expiration. I should have gone a little bit longer, but I really don't plan on holding them past the 22nd of July. So as soon as July is done, I'm going to dump it. As soon as the ship lands or crashes, I hope that it lands. Obviously, I don't want to see anything bad happen. And I'll explain more about that if you guys want on why I'm buying these puts. If you care to know, I'll tell you why. But on Monday, if you get Amazon opens up somewhere above this black horizontal line, which is $3,473, if it opens up above that, and then starts to break down below it during the trading day, then that for me in my trading strategy is a potential shorting opportunity. I may actually add some more to my position if it does do that. And yes, I might be chasing it, but we really haven't made a lower low yet. We really haven't shown any weakness for the better part of 2.5 weeks on Amazon. Now, we do know that's coming into Prime Day, right? That's obviously one of the biggest moments for Amazon is Prime Day. We know that it's actually not Prime Day, it's Prime Days. And if you know, you go to Amazon and you always got crazy deals going on Amazon. That's going to be June 21st and 22nd. So that's actually going to be next week. And I do believe personally the reason you're seeing this big rally is anticipation of one of the biggest selling events ever. It's Prime Day, right? Prime Day is just a monster revenue generator for Amazon. So I think that this is the buy the rumor, sell the news. Remember, next week will be that Prime Day piece. So that'd be an interesting change. But Lee, if I look at this chart here, I want to show you guys a contrast between this and one other. I like this Amazon because A, I'm short already. B, it's coming into overhead supply. C, you've got high volume. And D, it's after a very aggressive move up. The danger here is you're going counter trend, right? We know that Prime Day historically has been very bullish for Amazon. So that's the negative side of it. For Serge, who says, please explain more. I bought puts not because of Prime Day, not because I don't like Amazon. I think Amazon's one of the best companies that have ever graced the face of the planet for what it does. However, there is a huge risk to Amazon happening next month, and that's when Jeff Bezos flies up into space on his Blue Origin rocket that really hasn't been done on a consumer level. Now, look, I don't think this thing's going to crash, but I'm looking at it as, for me, it's cheap insurance. When I say insurance, let's say hypothetically, well, not hypothetically, I own 2 puts right now on Amazon. I will probably own more by the time this takes off, but I own 2 puts, which means I'm betting that Amazon's going to drop. And here's the reason. If Jeff Bezos goes up into space, remember, he's no longer the CEO of Amazon. He's on the chairman of the board, so he's still tied to it. But when Steve Jobs died, even before that, he wasn't the president or CEO. He was on the chairman of the board as well. When that news came out, Apple took a hit. It took a big hit, and he really wasn't even part of the operations. So I'm looking at it the same way. If something were to happen to Bezos, I think Amazon's going to take a big dump, and it could be a big one. So what's the risk to me by going short Amazon with puts, where I have defined risk? I know exactly how much I'm risking because that's how much I paid for these put options. The risk to me is that Jeff Bezos flies up into space, everything is fine, he lands, it's perfect, great. Do you think Amazon's going to soar because of that? I don't believe so, because it's not even an Amazon company. Right? Blue Origin is a totally different company that Jeff Bezos either bought into or started. I don't know all the mechanics there, but it's a totally different company. So I don't believe that a successful trip would cost me anything, would really spike the price of Amazon. You flip that over to the negative side here. What's the potential reward for shorting it? And then I've been getting a lot of grief from friends about this one because they're like, "Oh, you're mean. You're trying to capitalize on someone's demise." I'm not. It's simply, I'm taking a bet. And to me, the odds, I don't believe I'm risking a lot if I'm wrong, because I don't think Amazon's going to soar. But what would happen if theoretically, and I hope it doesn't, I'll be praying for success, but what if it doesn't? What if that ship crashes? If that ship crashes, and let's say it was his demise and Bezos is now done, you're going to see a pretty sharp drop in Amazon. So to me, I have much greater reward for a sell-off versus the risk of it spiking and going up much higher. That's the primary reason for these puts. I was going to buy closer to July, but I saw the big rally up, and I was like, you know what? I'm going to get some here when I feel like it's been overbought up because of Prime Day coming up next week. So, Serge, there you go. Hopefully he'll do it. Big Up says, Blue Origin is a 10-minute ride in space, but it's a takeoff and landing that count. Yeah, right? I'm not worried about flying up in space. I'm worried about the takeoff and landing. I'm scarred for life because when I was in, I want to say 7th, I think it was 6th or 7th grade, the space shuttle, I think it was Challenger, blew up. And I remember being surrounded by classmates that were just crying and going, and I really didn't put 2 and 2 together on how significant that was. But that obviously was one of the most devastating space crashes that's ever happened. Now, we're probably much safer. I think that by doing this privatized as well, it's going to be a much safer trip. I don't think Bezos would, in a million years, get on something that he felt that he could potentially die on. I think he feels pretty safe about it. I'm just taking that what-if kind of bet. You know, it's the long shot on the horse to win the race, but I don't think that the downside for me as the option buyer buying these puts is that dramatic because, A, I have defined risk, and B, I don't think Amazon's going to soar if it's a successful trip. Exactly. You know, and Serge, it's kind of interesting. I had I was living in Italy. I was living in Milan, and the markets open at 2 p.m. there. So when I say markets, the U.S. markets open at 2 p.m. in Italy. And I was sitting at my desk, and you could hear a boom, like a loud boom one day. And people in the office in Italian are running around, and people freaking out. And we climbed up to the roof, and we could see the Pirelli building in downtown Milan was on fire. Now, this was after 9/11, so all of a sudden, our minds all of a sudden go, oh shit. Somebody's flying planes into the Pirelli building in Milan. I went out. I sprinted downstairs. Like it was one of those, like a fireman running down a burning building. I was leaping down flights of stairs to get back to my desk, and I opened up my platform and I just started shorting every stock that I could possibly get to on the US markets. Now, I was ahead of every news agency. U.S. markets didn't even move at that moment in time. And then all of a sudden, the U.S. equity market started to fall quickly as the news that Italy had been hit by terrorist attack, right? And it just started to free fall. So it started to free fall. I did very well in a extremely short period of time. And then I closed out my short positions and went to cash. And my coworkers were like, "You're an evil person. You're prospering on the demise and the death of others." No. I'm doing nothing here. This is a market event, and I'm looking, saying, I know this market's going to drop because of this incident. I'm not wishing any death or damage or destruction to buildings, property, lives, whatever. It's just an occurrence, and it's just how trading works, right? You could look at a bad earnings announcement as a financial death for a company. Am I wrong for shorting a company because they missed earnings by 50%? No. It's knowing that there's going to be actions or reactions. So that one always bothers me when people are like, "Oh, well, you're just a bad person because you're shorting the market or betting that someone's going to die." That's not the case here. To me, it's a leveraged bet where I'm looking at it saying the odds are that nothing is going to happen. And if nothing happens, I still could win on this trade because I do believe that the Prime Day move in Amazon is already priced in, right? So there you go. That's it. I'll check that one out. The Challenger, yeah. I remember that one. God, it was crazy. Nick, you're as old as me? You're older. You're older than me. Let's see. It's not how far you fall. It's the last inch that matters. That's true, especially the way these shuttles come down. Okay, so Lee, that's my thought on Amazon. Let me show you one that I like better than Amazon as of close today. So I run a scan, kind of looking at some few things that might be potential setups for Monday. Now I could do it over the weekend, but my routine is normally after market closes, I'll run through some scans and filters and find things I like for the next trading session. Nvidia is on the top of my list right now as potential shorts for Monday. Check out NVDA. So it has almost all the same criteria that you saw with Amazon. However, there's one thing I like better here. I like Amazon as a company better than Nvidia, but I think Nvidia is pretty damn good. Notice the shooting star, long topping tail, closing right near the bottom of today's candle. That looks great to me. I love the way this thing closed. Also, look at the bottom volume. So Nvidia today was at 23 million shares traded, over 23 million shares. And if you look at the average, it's about 9.6 million. So you're well over double normal volume on a shooting star. This is, to me, classic capitulation, a potential blow-off event where I'm expecting this to have a little bit of a pullback. The thing that sucks for this trade, for me personally, is it's a Friday. I would love if this was on a Wednesday or a Thursday or a Monday so I could come in tomorrow. A lot of times when you have these patterns, by Monday, the markets have softened up a little bit. They've digested some information. The fear, greed, panic, euphoria, whatever, might dissipate a little. That said, it's pretty much the same rule. If we can get below 743 on Nvidia tomorrow, I need to open up somewhere above 743 on Monday and then start to drop below 743. I think you might have a great short on your hands. Now, the big difference here between Nvidia and Amazon is there's a couple. Number one, the candlestick formation for Nvidia is much better than one on Amazon. The volume spike is much better than one on Amazon. Nvidia, however, does not have an overhead supply level, right? There's nothing that it's running into. So that gives Amazon the advantage here as a short because it's coming into those highs we saw about a month and a half ago. Right now, Nvidia doesn't have that. However, it's had a pretty tremendous run. If you look at the run-up from the lows here, and we'll do the same thing for Amazon just to do a Pepsi challenge, I'll go from where it opened to where it closed at. You're looking at 37% rally up in Nvidia in 30 days. Now, Amazon doesn't have that kind of move. It's actually more accelerated, but still not that same kind of move. I'll put it to 30 days so you can see the number. 9% is what you're looking at. You want to know 30 days? All right, we'll go 30 days. Let's go 30 exactly so we have apples to apples here. All right. 9.23%. So the move in Nvidia, much sharper, much more pronounced, much higher volume. So keep an eye on Nvidia on Monday. This could be a great shorting opportunity as a blow-off event for just such a great move. Again, I love Nvidia. I love the company. I think they're headed in the right direction and one of the leaders out there. That doesn't mean it's not due for a pullback or has gotten a little bit ahead of itself. So Lee, great question. Thank you for that on Amazon, I appreciate it. You've been sending some great questions, so thank you for all that you do. Heather, I own some Constellation Brand stock and had a terrible week. How can I protect my profits? Well, you're a little bit late on that one, to be honest. Constellation is STZ. Yeah. Ooh, good goodness. Yeah, it has been an ugly week for Constellation Brands. Just because we're doing things kind of on a weekly review, I will tell you exactly how much is down for the week. You're looking down almost 7%. So not the end of the world, but let's see what your thoughts are on where it might be headed. Now, you do have multiple gaps coming up where it's going to fill. My guess is, Heather, you're probably going to be looking at the $210 mark here on Constellation Brands sometime soon. Just because of momentum. You had really high volume today. You guys can see the volume spike. When I say really high volume, compared to its normal, right? This is a very thinly, let me take that back. It's not thinly. It's just a lower volume stock than I like to actively trade. Trades about 1 million shares average per day. Today was 1.7 million on that. So definitely a big day for, a busy day for Constellation Brands. That said, now what's the expectation here? If you're still holding this, Heather, and you're losing money, a couple of different things you could do. You could obviously be using options to protect your trade. If you're long, you could be buying puts to hedge any further downside move. So if it starts to fall even further, the option will be making money while your initial position is losing money. And you could offset that. Make sure when you do that, you have the correct amount of options or put option contracts to cover your position, whatever size that may be. The other thing you could do here, I mean, it really depends on what your goals and objectives are. I love selling puts, and Constellation Brands, I'm definitely a fan. Constellation Brands and Modellens also had a similar picture to it, although Modellens, I always mess up the pronunciation there. That's Modelo, which is one of my favorite beers out there. So, you could be selling put options to and collecting premium along the way, but you put yourself at risk for potentially owning those shares if it drops much lower. That's the easiest way. The easiest way to protect your profits would be to buy some put options and hedge your position that way if you felt that this sell-off was going to continue down even further. All right, what do I got here? Target for Nvidia. All right, what do I got for Nvidia? It really doesn't feel like it's going to drop that much. You look at this big rally. I mean, there's one glaringly obvious spot. So if I'm shorting it for tomorrow, I'm looking at 710 or 711. All right, and that's just the origin of the last big move. This is a daily chart, by the way. So, it could hit 711 tomorrow or on Monday. It could very easily just sell off and, fine. If positioned correctly, you catch 30 points on this bad boy. That's pretty good. Even if you just had 100 shares, you're looking at $3,000, right? For if you got 30 points on it. So that's my first one. There are some unfilled gaps over here, but I'm not even thinking about those right now. I'm really looking at just the first stop that I think it's going to see, because I really have shifted my focus more towards the day trading side of things, just given the inflation, the Fed, and the way our markets have been fairly erratic over the past couple weeks. So I don't really want to be holding long-term positions. I do that with options, not necessarily with the underlier. All right. What time we got? Holy cow. Let's see. I'm going to read this one out here because I think this has a lot to do with market psychology and etc. So Alan, who always sending in great questions as well. Thank you, Alan. He says, I found that there are a lot of contradictions when it comes to trading. One of them is seeing patterns that are very obvious. On one hand, if many people see the same obvious play, that's fuel for your thesis and improves the likelihood of success. However, markets are also zero-sum for traders. I have to stop right there. Not zero-sum. I would say it's a negative-sum game. To me, it's a misconception that markets are a zero-sum game. When they say zero-sum game, that's if I bought a stock, the person who sold it to me, there's a competition there, and one of us is going to be right. If I'm right, that person who sold it to me lost money, and if I'm wrong, that person that sold it to me made money. So that's the zero-sum game. But remember, there's always commissions being taken out of it and fees. So to me, it's a negative-sum game where fees are taking out of it. Anyway, that's just my weird perspective of it. Let me finish reading here. However, if markets are a zero-sum game for traders, which necessitates that most people lose, this fuels the contrarian narrative, which suggests obvious plays that are played by the masses are likely traps. How can one distinguish between those two mindsets when looking at trading setups that seem really good, almost too good? I love it. This is a great one. And it goes back to, for those who have known me for a long time, you'll know that I have a saying or a perspective of these markets. And that perspective is this, and I hope that you all adopt this because I do personally believe this is one of the saving graces for my trading career has been, trading is not about making money. And most of you are going to go, what the hell are you talking about, dude? That's all it is. No, trading is not about making money. And I think if you focus just on the making money side, which a lot of people who are looking at these patterns and formations are, then what happens is you forget about the most important thing. So my mantra is, trading is not about making money. It's about losing money. And if you don't lose money trading, then you will organically make money. You'll make money on accident. The only thing that you can't have happen to you is have big losses. Yeah, small losses, big deal. We take them all the time. Hell, I didn't have a losing trade today, but I've had many losing trades this week. It's okay, as long as those guys are kept small. And then down the road, I may have some trades that meet my 3-to-1 target, and I let it run, and all of a sudden it becomes a 50-to-1, 100-to-1, 1,000-to-1 winner. These things happen, right? Obviously, 1,000-to-1 is getting a little bit dramatic, but you can do very well. The key is don't let your trades go against you to the point that it blows your account. So to Alan's question here, when you see these obvious patterns, these formations, for example, the one we've been looking at recently has been on crude oil, right? You guys remember we talked about that ascending triangle on crude oil. And Alan's right. These are pattern formations. Let me bring up crude oil. I think I might still have the lines on. Oh, no, we took them off. I got tired of my old pictures. So here is, oops, nope, not the donkey day. That would be me. Here's the chart of crude oil, right? And we had some lines drawn. Let me go delete these bad boys. And this ascending triangle basically was right through here, right? And it's basically saying that if you look at these two lower lines, the horizontal black line is 66.80, and the line trending up, that is building pressure. And it's to me, these patterns, these visuals are a way to read psychology, a way to look at the market and say, yes, I know it's going up because price is higher than it was, but is there something that I can glean from the action of price over time? And you notice, making higher lows, but it can't seem to get above the 66.80 mark. So when we were on the show, we said, look, if you get a close above 66.80, let's round it up to $70 to $67, then you could do a breakout trade on this one. And you'll notice it's had a pretty nice rip up. To Alan's point, if so many people are watching this, couldn't an institution throw a big order out here to pop it up and then rip it back down? Yeah, it's called a bull trap. It's a head fake move. It happens all the time. And I get caught on those where I'll buy on the breakout and all of a sudden it comes back down and it takes me out. Then again, you get situations like this where you bought at 67. We had targeted 72 on this trade. You're looking at a $5 winner. Well, positioned properly, that's going to pad your accounts nicely, put some nice money in there. So while I do think that these patterns do work more often than not, there are a lot of times where you will get institutional tweaking or money coming in and head fakes or fake moves. Fine. I still am going to trade every ascending triangle the same way. Every descending triangle the same way. Every shooting star the same way. Every hammer formation the same way. Why? Because as long as I manage my risk to the downside and I don't lose a lot of money, those patterns, which do have huge psychological impact on retail traders as well as institutions, they almost become self-fulfilling prophecies. And as you'll hear so often in the financial markets, everything works. 100% of things work until they don't. Gotta love statistics. So I'm going to go with the patterns that I believe most retail traders and institutions are looking at. Because if it's going to make a self-fulfilling prophecy for them, great. I'm going to jump on that trade as long as I can and manage my risk accordingly. Both from my initial stop loss, which I can't erase that. It has to stay there because it's paramount that I don't lose a lot of money. Now, here's what happens to a lot of traders. And this is a great point. Alan says that most people lose. It's true. The vast majority of retail traders lose. It's no secret. It's no mystery. It's common out there. I wish there were more studies on it to show exactly why, but you'd have to go into all the different brokerage accounts to get it. So if we know for a fact that the vast majority of people in this market lose money, you have to ask yourself, well, why are they losing money? And I can tell you exactly why. Do I have my laws here? Oh, I think they're back over by my computer over there. But I have my 10 laws I was showing you guys the other day. The retail population lose because of what's on that list. At least that's what was causing me to lose. Your rules will be slightly different, but you're going to have the same common things. Biggest reasons why retail traders lose is they become a Reddit type trader, right? And they think, I'm going to have diamond hands. Yeah, I'm going to hold a stock like AMC because somebody told me it's going to $1,000. I'm going to buy it at $60 and I'm just going to hold that thing forever. Well, you're probably going to end up holding it as it goes from 60 back down to 50 to 40 to 30 to 20 to 10 and lingers around that $5 to $10 mark until the economy gets back on track, and then it goes right back to slowly increasing. But don't think you're going to get to $100 on that thing. Or you hold your GameStop because some clown on social media told you it was going to go to $1,000 and Elon Musk was going to put a sticker on the rocket that he's shooting into space with the GameStop logo if it got to $1,000 per share. Really? Again, I believe it's going bankrupt. The fundamentals tell me that. The fundamentals say this company, not only is their business model outdated, what they do is outdated, and they're losing $3 per share. So why would you buy that? Some retail trader is going to buy it at $250 and hold that thing into bankruptcy. That is why people lose. There's got to be a number where you say, I've had enough, I'm out. It's like a bad relationship, right? You can only take enough abuse before serenity now, I'm out of here. Well, you stay in that thing forever, that's just damage on you, all right? So, Alan, that to me is why the retail trader loses. And it has nothing to do with they use stochastics or Bollinger Bands. It has nothing to do with they're using tea leaves or moonbeams or the color hair that's being shed by their German Shepherd. That's a personal one for me. It has nothing to do with any of that. You could literally throw darts at a list of stocks and trade that way. As long as you're not taking huge losses and you put your odds in your favor by going with the trend. Then you add in things like supply and demand, you add in risk management, you add in position sizing strategies and techniques. All of those things are designed to put the odds in your favor. The problem is most people don't take the time to do it. They're too lazy. They think they're going to get rich by buying some meme stock. They think they're going to get rich by buying some shit coin cryptocurrency that serves no purpose in society whatsoever. But hey, I'm going to get rich off this. They're going to lose. And ultimately, there'll be a statistic and cry in their pillows and go to sleep. But learn how these markets work. People lose in this market because they don't use stop losses. Period. Whew. That long rant deserves another nice swig of Cutwater American Rye Whiskey. I wish I was sponsored by a whiskey company. Great question from Rogelio. Rogelio says, what percent do you use for a stop loss? I don't use a percentage. So when you go through different courses, they'll tell you, and it ranges from where you go. I knew one school that said 5% should be the maximum risk. I think that's way too much. I think, especially if you're learning, go with a 1% stop loss, right? And you can adjust your share size accordingly and how many shares you're going to trade to make that work better. So it's a combination of how wide the stop loss is. It also has to do with how much that specific security is moving. Normally, it's a number for me that's going to be above or below a supply or demand zone, depending on which way I'm going long or short. So that's pretty much it. As John says, follow the process. Yep. If you talk to... I've had the luxury over the years of working with well over 150 traders in Online Trading Academy. It really is great. And some of them were amazing traders. Some were okay. But there were a lot that I really learned a lot from. And almost every one of the ones that's really, really successful will tell you this. At its best, trading is boring. It's dull. All you're doing is following a specific set of rules, and you're applying it to price charts. Doesn't seem like it's that. It's not like it's a fireman who's rushing into burning buildings to save people, or climbing tall trees to save cats, or a police officer who's getting shot at every day by people that. No, let me not go down that path. Those are crazy, risky jobs. I'm literally sitting behind a computer going, "Oh, it hit this price level. I'm gonna hit that buy button. Great. Okay, I bought it. Here's my stop loss. Okay, I can now go play golf. I can do whatever I want." It's boring. I think for most people, the challenge that you incur is ones that you make on your own, meaning you sit there and you watch it too much. You torture yourself through overanalysis, or you try to justify every single tick that happens, and you get emotional about, oh, it's up a penny, oh, it's down a penny, oh, it's up a penny, down a penny. Relax. You had an overall plan. If you told yourself you're going to risk 50 cents per share and you knew you had a $500 stop loss, then you can trade 1,000 shares. 1,000 shares at 50 cent stop loss, that's $500 stop loss. Great. Set your stop loss at the appropriate point. Go out and do something else and enjoy life. All right. There you go, Alan. That's my 2 cents on it. What else do I have? Let's see. How much time do I got? Oh, man. All right. Last one. When you're making money is boring. Well, it's exciting. That's the best part, right? This has been a great week. I had a very good week, but I can't get excited about it. Like, obviously, I don't want to come on. I'm not going to forever come out to you guys and start boasting and be like, hey, I made X amount of dollars this week, or I would never do that. Occasionally, I'll show you guys trades I think did really well, but I'm not really showing because of the gain. I'm showing because of the process, right? To me, when you have a great trade, you look back, you said, man, everything that I learned in that process and applied, nailed it. Killer. That's awesome. And you pat yourself on the back because no one else is going to do that for you. Don't brag, don't boast. I mean, I'm certainly not going to post how much I made this week, but I had a good week. We'll say it's going to be a fun weekend. We'll have some fun. Let's see. What was the question here? Todd, I'll get your question in just a second. Let me just do that first. Nvidia, why not 690? Well, look, there's all kinds of places here where you could put your stop losses. Let me bring up the Nvidia chart. Why not 690? Ooh, yeah, I wouldn't do 690. It would go below. Like for me, it'd have to be like below this. And I know why you're doing 690. You're thinking 690 is this little spot here. The reason, and that's a good question, Todd. Thank you for sending that in. The reason I like the 7-11 line better is just look at the candle. I don't care why it happened, but it's one of the biggest candles you see on the screen, and it's one of the biggest volume spikes you have on the screen. There is emotion here. That could very easily be some institution came out and said, hey, I need to do a market buy for, 1 million shares and rip that thing to the upside. Great. I don't know if it's still there when it gets back, but I'm hoping it is. So that's my first spot. You notice the move out of your 690 mark really wasn't that strong. And also retested, came back down a little bit. So you could certainly put it at 690, which is right here. I would definitely put my stop loss down below 685 if you did that one. But notice on this daily, there's a lot of green space between 685 and getting all the way down here to call it 650. So there is the potential here for Nvidia to have some pretty nice pullback. So great question, Todd. And Rogelio, thank you. Let's see. Big Eb says, does the July 20th 4-to-1 split on Nvidia enter into your expiration date strategy on puts? Yeah, it definitely does. Clearly, I'm still bullish on Nvidia for that reason. Is we are a month away from a 4-to-1 split. And as we saw what happened with Tesla, I mean, that should be fresh in everybody's memory. When they said they were doing that 4-to-1 split, that thing soared. It went crazy. This could definitely be part of that. I think you'll see a pullback, but do I expect it to be a crash? And I think to Big Eb's point, and to the gentleman, Todd, if you look at that price chart, I'm not expecting it to give back all this move. This move is built because everyone's trying to get a hold of some Nvidia shares so they can enjoy a 4-to-1 split. Because, boy, if you owned one share, you're now going to have 4 shares in your account. That's a great psychology piece that people love to jump onto. So I don't think it's going to have a big pullback. But I look at this, and it does look like it's setting up for a pullback. And I think that a logical test point would be 7-11. Right? We'll see next week if I'm wrong or if I'm right. I'm hoping that Monday that I'm up early. I usually don't like to wake up too early in the mornings, but I may actually do that, maybe set some limit orders here. If we open up above 743, go short on some Nvidia. I'll probably buy them with puts, and I'll probably go out. I most likely will go out, if I'm buying them, I'm going to go out 90 days, but I don't need to because I'm just going to do it for, it could literally be a day trade, depending on how fast this thing falls, if it falls. All right. That's going to do it. I had one more question, but I have to get out of here before the end of the day. I got so much stuff I got to do. I have literally a meeting I'm supposed to be in right now, so I told him, I can't cancel the meeting, guys. I got to do this show. All right. Well, cheers, everybody. I hope you got some questions answered. I hope you had a good trading week out there. Hope we put some green on your screen. We are going to see some very exciting stuff happen next week, not because of guests on the show. I will have Bill Addis on Tuesday, so that should be an exciting one. But next week, we have a lot of pretty big data. We talked about CPI or PPI last week, CPI this week, or maybe I got them backwards. But either way, we had CPI, we had PPI. The PCE price index, which is probably the Fed's favorite measure of inflation, comes out on Friday. On Wednesday, you've got the euro, the British pound coming out with economic announcements with regards to manufacturing. And if you look at what Powell was saying, hey, look, manufacturing's great. Everything looks great. We are robust. We have a very strong job market right now. Really? The numbers don't look that great to me when we look at manufacturing. So that'll be coming out on Wednesday. We'll talk more about that next week. But so much to talk about. A lot of great trading activity going on, and hopefully we'll get some better earnings in the next week. Have a restful weekend. No, this is going to be one of those weekends. I'm going to go out and have some fun. I would encourage you all to go out and have some fun. Masks off, go have some fun and enjoy life a little bit. So thank you guys so much for the show today. I hope you enjoyed it. If you have anything specific that you want me to answer, there is a email on the screen. It's TraderMerlin@gmail.com. I know some of you send in emails there. Most of you should. If you got any questions about stuff, just send them on in. You want me to talk about a specific topic or answer some questions, I will within reason. Obviously, I'm not going to give away core strategy, etc., but I'm happy to give as much information as I can. So send them on in at TraderMerlin@gmail.com. Rick says Merlin's starting to look drunk. Really? Come on, man. I've had 2 sips of whiskey. It's going to take a little bit more than that, buddy. So, yes, it will be a Blanton's type of weekend. Anyway, thank you guys so much for the support. Hope you enjoyed the show. We should have some good times next week as well. So if you like the show, give me a thumbs up. If not, I'll see you next weekend. Take care, or next week. Take care, everybody. I'm red because it's hot, people. It's hot in here. I have no AC on.